All right. Good afternoon, Simpler family. I hope you're doing well on this Friday, March the 28th. I wanted to talk to you today and just spend the next 30 minutes talking about having a trade plan, what a trade plan is, and the importance of having that trading plan. This is something that I am very, very passionate about. It is something that I do for every trade that I take on. If I am going to put my hard earned cash at risk in the stock market, I believe that it is important to have a plan before I ever get into a trade or before I ever put my money at risk. So let's dive in to what a trade plan is. The definition of a trade plan is a written strategy outlining the entry, management, and exit of trades. The purpose provides a clear framework to guide decision making in trading. Now, I'm going to put a little note here. This is providing a guide to decision making based on price levels and not our emotions while we're in a trade. Please note it's not a guarantee of profit, but a roadmap to manage risk and emotions. Why should we have a trade plan? Number one, it provides clarity. It removes ambiguity during fast moving markets. It gives us risk management. It sets predefined rules that protects our capital. It helps us to control our emotions. It helps us to avoid impulsive emotion driven decisions. Remember, I like my decisions to be based on price action and not my emotions. And it also provides consistency. It creates a repeatable process for every trade. Now, you might ask yourself, especially if you're new to trading, what makes up a trade plan? Number one, market analysis. We need to know what markets or what tickers we will be trading, right? So you can't just put on trades without knowing what it is that you are going to potentially be trading. So I like to each week for my swing trades, look at the market and then pick the top 6 to 8 names that I am interested in creating a trade plan for. And then I follow the plan and execute. Number two, you need to have entry. You need to know where you're going to enter a trade. Set clear signals and conditions for entering a trade. You need to know what your plan is ahead of time, what price point you want to enter a trade, and also if the market at the time that your entry triggers, is the market still looking like it was when you created your trade plan? Obviously, it's good to have an exit criteria. You need to establish both profit targets and stop loss levels. An exit isn't only about when you're going to uh, exit a winning trade. You need to have an exit criteria for your stop loss as well. It's not easy to admit that we're wrong in a trade. That is not easy, but it is very, very important to know where you are wrong in the trade and have a process for how you will stop out of each one of your trades. Risk management. You need to decide on position sizing and an acceptable loss per trade. This will be different for each of us. There is not, in my opinion, a golden rule as far as the percentage of your overall capital that you risk on a trade or the allotted amount that you're going to risk on a trade. It is dependent upon you. It's dependent upon your account size, and it's also dependent upon your tolerance for losers, right? So I might say I am fine with losing $1,000 on a trade, but to you, that might sound way, way too big, and that's okay. But you do need to know what that allocation amount is that you put on a trade and keep in mind that, especially when swing trading, you could wake up the next day and a position that you put on the day before, if we have a capitulation event and price moves in the opposite direction, you could wake up the next morning and your position is worth zero. So know that about risk when you place a trade, especially swing trades, the position could be at zero the next time the market is open and you're able to trade. And then you also need to have a review process of your trade plan. You need to know how you're going to outline and track your performance so that if what you are doing, right, your trade plan, the criteria that you are using, if it is not working over the course of, say, 30 trades or 30 days of trading that strategy, then it's important to make adjustments to your overall trade plan strategy. What, in my opinion, are must haves when creating a trade plan? Number one, entry. Where will you start your trade? You need to know the strike price and the expiration that you will be trading. You need to know, do you prefer a conservative or an aggressive entry? All of us have different trading personalities. Some traders are very aggressive with their trading, and others, like myself, are more conservative. You must know ahead of time which type of entry you're going to take. I'll give you an example. An aggressive entry might be as soon as that trigger that says you're going to enter the trade, as soon as that is touched, you enter the trade. A more conservative approach, in this example, I'm going to say that you're going long. You're starting a bullish position, okay? A conservative approach might be that price pulls back to your entry level, but you're waiting until the next candle or a smaller time frame candle starts to make higher lows or higher highs. That would be a more conservative approach. Before you enter the trade, you need to establish if you're going to take the aggressive approach or the conservative approach. The next must have for all trading plans is a profit target. You need to establish both profit targets along the way as well as your final target. We like in the trendy room here at Simpler, we like to call the profit targets, we like to call those trims. So after entering a trade, there are levels on our chart that we will, for example, if we enter a trade buying 4 contracts at each profit target, we will be selling 1 or 2 of those contracts until price gets to our final target, especially in the market environment we are in right now. I believe it is important to have some profit targets where you take some money that the market is giving you along the way to your final target. Must have the stop loss. Know where you will exit the trade for a loss. In the trendy room, we use a candle close. So a wick on a candle will not stop us out, but whatever time frame chart we're trading off of, we use a candle close. That is what works the best for supply and demand trading, and it might not work for the strategy that you trade. Then you would have a hard stop. But the important part here is to have in your trade plan that stop loss amount, whether it be a price level, a percentage, what have you, whatever works for your trading strategy, you need to know what that stop loss is. And then the review process, right? I've already explained that's outlining how you'll track the performance and adjusting your strategy. I do this by journaling each and every trade that I enter. I want to know what my emotions were when getting into the trade, how I was feeling that day. You might not think that that's important, but as you read over your journals, if you do this, you will learn that oftentimes our emotional state before the market ever opens can influence our trading. And then also, I journal each and every trade with what the trade plan is, how the trade plan worked, right? Profit, loss, percentage, etc. And then what could I have done better in trading that trade? And also what went really well. I include all of that in each journal. And then at the end of the day, at the end of the week, I am reviewing my journals and making adjustments when necessary, considering the overall market behavior. I want to this is actually something that I will cover in an upcoming workshop that I have coming up in April or May, I believe. So I'm going to click out of here and I'm going to give you an example of a trade plan that we traded this morning on SPY. So we have a strategy in the trendy room. We have an indicator that we use for day trading, and it's called the PMZ. Okay, that is this red rectangle that you see right here on my chart. So this morning, the first thing, remember, market analysis is important, right? So I use these trendy trend labels at the top of the screen. When the market opened, and because this was a day trade, I look at this daily trend and it was bearish. Okay. So that gave me an idea that if price dropped below this PMZ, I wanted to buy at the money puts with today's expiration. Remember, it's important to know the expiration and the strike price that you will be choosing to enter the trade. The criteria is if this happens in the first hour of the market, I am choosing 0 DTE for a day trade. And after the first hour of the market, I would have chose 1 DTE. So I did my market analysis by establishing that the market was bearish going into the opening bell. Then I found my entry, which in this case was the bottom of that PMZ, which is 564.87. I knew what strike I was choosing. I chose the 565 puts because those were the at the money puts. And because this happened in the first hour of the market open, it actually happened 20 minutes into the market open, I knew my expiration. The next thing that I had established ahead of time was where I was going to take profits on the way down to my ultimate target, which was right here at 558.03. So, because I had a level that could and did act as support on the opening bell, I knew that I wanted to pay myself, albeit a small winner here, right? But I had 4 contracts. So I trimmed one at this level. Then I trimmed one at, and sorry, I had removed this level ahead of time, but I had a trim here at 563.30. And so I trimmed another. Now I'm down to 2 contracts. I have a process for staying in this trade as long as my break even stop isn't hit. I want to stay in the trade for my next levels. And I use some Fibonacci to stay in the trade as well. So I had and those fibs ran on this trade as I hit the first level, right? According to my trading plan, I am paying myself as these levels are hit on the way down to my final target. So this trade worked out very well. We got in at $2.14 a contract, and we exited, or I exited the trade at, I believe, $6.19 a contract. That's a great win for a pretty simple play down to my final target. But the important thing that you need to know is that I had established this trade plan, shared this trade plan with our room before 30 minutes before the market even opened, going short below the PMZ, taking profits on the way down to the final target. Now, I made the decision here at the final target to put in a 50-cent trailing stop, which was stopped out. And could I've collected more profits as price continued to drop? Yes, absolutely I could. But that's hindsight, which is always 2020. And I do not care about this part of the extra $200 I could have made by staying in the trade. What I care about is that I used discipline to both set up a trade plan ahead of time, enter as the trigger said to, taking profits on the way down to my final target, My plan is always at the final target to do a trailing stop, which I did, and it was a profitable trade. That's important, but more important is that I had a plan and I stuck with it using discipline all the way through the trade. Think about it like this: a trade plan is like taking a trip, taking a vacation, right? Number one, you need to know how or when you're going to leave. That's your entry. All right. You need to know where you're going. That's important. That's your target. And you need to know from point A to point B, what are your plans in between? If you're driving, you need to know where you're going to make pit stops to rest, right? Or to get gas. Or if you drive an electric vehicle, where you're going to charge that vehicle. Those are your profit targets, right? Also, you need to know, hey, I know I had this plan to go on vacation, but something unforeseen happened, and I just don't think it's a good time right now to go on this vacation because this, and that happened. Maybe someone got sick and you don't want to travel while a kid is sick for sure. Believe me, I just did that to Bermuda and it was miserable. So you have an exit plan as well. All right. That is something I think we can all relate to. Typically, a big vacation, you're not just going to fly blindly, right? You're going to have a plan for that vacation, and then you're going to execute the plan, unless, of course, things happen out of your control and you need to abandon ship, right? So, if you find it's important to have a plan when taking a big vacation, then you should also find it important to have a plan before you take a trip on the stock market train. I believe if you can get in a habit of having a trade plan before price ever gets to an entry or before you ever enter a trade, and then you work diligently on staying disciplined to following your trade plan, I believe you will find that you have become a much more disciplined and consistently profitable trader than if you just willy nilly your way through a trade. All right. I'm going to give you another example. This was a day trade example and a trade plan we have had, and it worked out very well. We also, or I should say, in the trendy room, just started a trade on XLK, the technology sector. Now, look, it's in a bearish trend. All right. I know that. Believe me, I know that. But when things have dropped so far and they are coming into a higher time frame demand zone, I like to have a plan for entering a swing trade. All right. Now, there were several names on my tech watch list that I was looking at starting trades, longer term swing trades, right? When they pulled back into these higher time frame demand zones. And as luck would have it, today, several of them did it at the same time. So, What do I do? Do I put on 6 different swing trades, all tech type names, allocating $6,000 of risk in one particular area of the market? No, not for me. I don't do that because I don't like to be overly allocated into one specific area. Sorry, I had to grab a drink there as I'm coughing a little bit. So rather than put on 6 different trades on names that had pulled back into a demand zone, which is an entry for me as a supply and demand trader, rather than put on long calls on Nvidia and Amazon and Google and Apple, just to name a few that pulled back into demand, I went with the ETF. Okay. Now, as I established, I know that right now the trend is bearish. I am simply scaling into, which means not all my allocation went in at this first level. I also have a lower level down here, and this is part of the plan that I shared with the trendy members, that I will add the rest of my allocation down in this level. I have a stop. I am wrong on this trade. If we get a candle close below 190, I'm wrong. I will take my loss like a champ. That's all right. Not every trade's going to be a winner, but I must know where my stop is before I enter the trade. And I must be okay with the risk before I enter that trade. Now, I have levels to trim my trade on the way back up to my ultimate target. So, in my trade plan, I know the market analysis is on the yearly neutral. Oop, just went bearish as we speak, but the analysis is it's bearish. That tells me to look at higher time frame demand zones. Boom. Ding, ding, ding. My alert went off that XLK had pulled back into a weekly demand zone. That is my entry. Okay. So I executed the entry knowing where my stop was, knowing where my profit targets were or are, and knowing where my ultimate target is at. Any questions about any of that? Not necessarily about this trade in particular, but about having a trade plan and why it is so important to have that plan before you enter a trade and to know where you're entering, whether you're scaling into the trade or it's one entry all at that first level, knowing where your stop loss is at, knowing where your profit targets are at, and knowing where your final target is at. Do we have any questions about that, or do you feel like I have explained it well? And if you have any questions, you can type them in the chat. I would be happy to answer them. But what I just have so much passion for is the importance not of how often you win or how much you win or how much you lose. I believe that you will become a better trader if you become a disciplined trader to have a plan and to stick to that plan regardless of emotions or outside noise. All right. I hope you have found this to be of value. I know that it has really changed the trajectory of my P&L during my trading career. And I look forward to talking to you again next week. And I look forward to seeing you in the different trading rooms here at Simpler Trading. I hope y'all have a wonderful weekend, and I will see you next week. Much love, fam.